Welcome everybody, and thank you all for taking your time out to listen to my vision of $30 finance. My name is Snehal, as you already know, and this is today's agenda. So I'm briefly going to talk about the existing infrastructure of banking outreach in rural India. Then I'm going to discuss the concept microfinance, on which the idea of $30 finance is based upon. Then I'm going to share some of the success stories in this realm of microfinance in India. Uh, then the ICT, that stands for Information and Communication Technologies for Human Development aspect of it, which I'm going to use in my idea of $30 finance, and that's what I'm going to talk about that. And in the end, I'll talk about the current idea, or the way I envisaged it, the $30 finance and its three phases, and the advantages and disadvantages that India as a country has to offer, because this project will be set up there. And finally, we'll have some time for the question and answer session. Moving on, okay. So I would like to set a context about India and its existing, banking services and its outreach to the rural population. So India is a big country in terms of population. It's geographically comparatively smaller. It has a 1.2 billion people, and out of this 1.2 billion people, 65% lives in rural areas. And current studies shows that 46% of the total population actually lives under poverty lines. So, and most of this population under poverty line is the rural population. So it's quite apparent that rural population in India is quite poor. And there are multiple reasons for that. One of the reasons, cited reason, is that there is no access to credit or money or formal banking services for the rural population. But on a brighter side, so there is a realization for the same, that Indian government and other institutes have realized that there is a very lack of credit and access to banking services for rural population. So what do the people in rural areas do then? So then they actually, because they do not have access to the traditional banks, they rely on the informal lending sector. And I threw a number here, like 36% of the rural population is dependent on the informal lending sector, which are nothing but the local money lenders, whose interest rate actually goes as high up to 300%. And that's one of the key reasons that's been cited for recent suicide that's been committed by the farmers. So that said, there are a lot of efforts undertaken by Indian government. Few of them are listed here, and I'll definitely going to talk about few of them in the later part of the presentation. One being the regional rural banks. RRB is a kind of bank that's been set for the very same purpose, for providing formal banking services to the rural India. And it's networked quite neatly actually. It's there in almost every village in India. The only thing is they are not able to provide the credit or money to borrowers from this low income group. Moving ahead, so I'll summarize the problem as there is a wide gap that exists in the availability of the formal banking sector, formal banking services, I beg your pardon, in the rural areas. So again, RRBs that I already spoke about are the regional rural banks that are set up with the very purpose of extending the banking services, the formal banking services of rural India. But still, the percentage, that 18.4% of the rural population, is the only it's a very abysmal percentage that's been covered by RRB, and it shows that there is a still a lot of work to do, and the scope of improvement is still there. And reasons, I mean, there could be n number of reasons. There are n number of reasons, but I have listed few of the key ones here, because these are the ones on which my idea of $30 finance vision is based upon. So few key reasons as highlighted here. First is the low income nature of the clients, and that's why the lack of credibility, because they do not have any collateral security, and they don't even have a credit history behind them to make the traditional bank understand them, that they would want to lend money to. high transaction cost for the banks, because the loan amounts are pretty small, but the operation cost is pretty high. It's the same for any amount, irrespective of the amount. So that's why the transaction cost ultimately becomes really high. Further, there is no mechanism exists that evaluates and monitors the repayment capacity of these poor people because of lack of data, and there is no way to track the credit history of low-income groups. And one seemingly possible solution is, definitely microfinance. And why I say that is because of its success in many other developing economies across the globe. One notable example is the Grameen Bank in Bangladesh, where it has actually made a lot of difference in elevating the poverty in order of magnitudes, to say the least. Let's see, this is for the people who are kind of unaware of this concept of microfinance. So in a nutshell, it's basically a provision for providing access to financial services for poor people, which includes customers as well as self-employed people. And as I already mentioned, the biggest success till date remains the Grameen Bank, which serves more than 7 million Grameen, poor Bangladeshi women. But at the same time, it's been observed that it's hard to replicate this success in other developing communities. There's one microfinance initiative called as SKS, which totally duplicates what's been done with what's been going on with Grameen Bank, and with fair amount of success in India too. So I'm going to talk about that in a while. And another thing that I want to talk about here is the microfinance institutions. Its acronym is MFIs in India. So government has realized that microfinance could be one of the way to which can be used to elevate the poverty, and that's how raise the socio-economic standards. Start. This particular slide talks about the role of commercial banks and government in the microfinance realm as it exists in India. So why would commercial banks want to be a part of microfinance? They are profit oriented, and they realize that there is a vast number of untapped small and marginal clients which exist at the bottom of the pyramid, and they actually see some of the business opportunities and ways to enhance their profit and business and also spread the risk. So commercial banks are there to make profit, but we can also use these commercial banks for providing the microfinance to the poor. And government, the role of government in this is they are promoting the microfinance institutions in a big way. So as I already mentioned, microfinance institutions act as a banking correspondence between these commercial banks at one end and the potential borrowers at the other end, which are the poor clients. So MFIs act as the intermediary by facilitating the funds and the transactions between the borrowers and the lenders. And government is promoting MFIs in a big way by identifying them, classifying them, rating them. And as I already mentioned, MFIs obtain funds from the banks, and these are according to the guidelines set by the Reserve Bank of India as of now. Let me share some of the success stories in this area of microfinance in India. So notably, there are these two success stories that I would like to share are of self-help groups, SHGs, and the SKS microfinance. I'll briefly gonna talk about both of them. So to begin with, SHGs, as the name suggests, self